morning and welcome to the Breakfast Club. My name's Darren Hancock, and here we are on the 30th of October 2024, coming up for non-farm payroll this week. So keep your trades really light. If you're not in anything, it's observation time. Sit back, relax, and just if you've made some profits this week, just keep those in your bank. This is the time of the week that you can get a serious beat down in the markets if you're not careful. So very important that you protect your assets for sure. All right, let's look for, just gonna make sure we're all live here. And there we are. I was telling one of our guys today that, talking to Derek this morning, thinking that this had a feeling of really heading south. So I liked this order block here when we got below it, and then we traded back through it here. And then the fear was that it would start to dig through this one, and it started to get through there. So come back, found support at this, and then started to go higher. Then now it's reversed on us. So it's one of those ones where you get beat up in two different directions. So you want to break or wait for a market structure break before considering going any lower. But it feels heavy. But like I said to Derek, you can't go by feelings. You really have to go by more logic. And for me, if we can get below this level right here, come back, find some support at it, then I'd like to see that be a level of support to go lower. Let's see if we can't see this on all visibilities, on all levels. So if we see these two candles get taken on the downside, I'm interested. God, I hate this thing. Got to get myself a mouse that I travel with here. Good morning, Hans. Just feels like it's going to be a dive day. Like it's just going to hammer down. I was watching this morning. I thought this would be a nice reversal. Now we've taken these out. I'd like to see a nice little reversal, get back up into this premium array here. And then at that 8:30 or 8:15, there was suddenly this big. Thought, oh, if we can start getting a close above here, I might consider going for this objective here. And it literally shot straight out into it. I was like, nah. Already took the objective I want, and the snapback that it gave was the like, well, if that's where you reach the objective I want, chances of me trying to reach it again inside this range, we've already hit optimum trade entry reversal. And then it started to degrade down, so we wanted to see this get taken on the downside. On a close, it did. And then you use the whole thing for support, and it went all the way back through it. And you're like, okay, now I'm in a new one going long. If we trade above here, and it did, came back inside, and you think, okay, is it finding support off of here to go higher? Nope, bounced down through here again. Now we got another reversal above these highs. Too many reversals and just keep getting caught on both sides of it, so you wait for a better setup. The DAX is down 1.4% today. Ooh, that's a big drop, hey? Let's have a look at AMD, and I'll switch that over to DAX and have a look. So AMD is coming back up into the range as we had hoped. We wanted to see it get above this level. It did. And now you want to see it break through here and go higher. But let's have a look at DAX. Yeah, that's a consolidation. If you get a return to there tomorrow, it's a big gap down already. If you can get a return back into this consolidation tomorrow for a CAM model, up for a run back down into this discount right here, you'd be aiming for 166 to 078. 078 on the downside today. And see if it just continues to pop through that, then you want to see these lows get taken, found support at that, and continue rocking it down. You want to see a decent fair value gap forming in here. Tomorrow come back up and just tap that and leave a portion of that open for a continuation on the downside. See, fuck, I knew it. Son of a bitch. Told Derek it felt heavy today. It's got a downside objective inside here. Good morning, Craig. See if we can't find you a little oil run here. I'm gonna wait for this to get back to this fair value gap here. I'd like to see it return into here in the next hour or so. Get back to this, the little cam model, and then get short there. So I'll wait for it to come back up in here. If we can get through this candle, look for a run down into 5855. Dow looks like a nice little runner today. This looks like it's ready to just hammer. If we can get through that candle and find yourself some support at 42.11 or 42.144 to 42.254. If we get a big down candle and come back into this tomorrow on a daily, like this could be just a big rocketer down today. Right now it's definitely more heavy. It's in a swing for heavy, but not a, it's in a reversal, but not a swing. We haven't broken structure yet to the downside to see some significant rundown. So we may get a little pause here during the election, run back up into here, and then like if they whip it up into here and then slam it down, you're looking for a big run down into these little gaps down below us here. Like that could drop 1,000, 2,000 handles. if we get some crazy motion going on here. And if they take that low, then we're heading for 40. 081. British pound. You got your crude run? Good for you, man. Excellent work. I don't see much in British pound right now. Even on 1 minute chart, it's kind of flat. You gotta break some structure here to get going higher. Same with euro. We have that low taken, fair value gap, returned into it here. You want to see this get taken and that taken right there to the upside on a close. Using all this as support to go higher. And crude, 6 o'clock this morning. What is it doing? Well, that's no good. I don't know why this keeps freezing up on me every time I go near oil. Everything else seems to be working fine. But oil, it does not like me playing with oil. My computer's just, the fans are ripping, so I don't know if it's my fan or if it's me or what the heck it is. No, I can't get anything in there. It won't give me anything. Nope. Come on. It's not letting me play in oil today. Do we get the run back to the... No, we'll just wait for this. Yeah, it's going to leave down without me. I would love a run to 1 hour fair value gap between 520 and 525, 575. Yeah, that would be my downside objective too. Sundura, I like that. That's a nice little objective there. Pull your fib tool on the whole range though and have a look and make sure that you watch the 50%, 62%, so on and so forth. Unless it's just a downside objective for you, then that's cool. Are you gonna give me oil, young? Let me play with oil. Come on. That's unbelievable. They're not letting me even look at it anymore. wheat downside. I still got more downside in wheat. We have got a reversal going on here though after taking out these lows, and we've come back inside it. So that may switch up for me again. If we get above this high, we're inside this range now, so I want to see if this holds price and we roll over and come back down and get through that imbalance on the downside, then use that to leverage going lower. Soybeans, I'm still looking for soybeans to take out the low. Watch here in corn. I've got 40.70 in corn, and I'm downside liquidity in coffee, or sell side, buy side liquidity on sugar. And that changes up if we get above, if we get below 21.92, then we're looking for sell side liquidity down here and here. Okay, let's just get bigger here. Quit dicking around with it. Live cattle, I like to see it support inside here, this whole consolidation. So 50%. I won't want to see it break 50% now that we've run the highs out. The question is whether or not we get below this low here. We're back into that consolidation, so you want to see some support there at the high to 50%. Cocoa's run out the lows, and the little piggies are filling in this gap here. So you're looking for a little more upside today for fulfill of that gap. Bitcoin. Who would have thought Bitcoin would have got to 74,000, hey? A non-tangible asset. There you go. If you take out this low, look for further downside prices. Go to your higher time frames to look for a run down further. I would love a return to there. Morning, anyone in the next long? Zach. Definitely not long, Zach. We didn't get the run back up into here that I was looking for. On the 1 minute chart, you didn't even quite get the low of this candle here. So look for, if we don't get 50% of this range and it comes back in for another retracement back into the consolidation before dropping lower, for 10 o'clock. I'd like to see that. If we run all the way back down into here, then you look for a reversal back inside this range you created this morning. Damn it. I knew it was heavy. Crap, crap, crap. I second guessed myself here, and then she went fat and heavy on me. Early bird catches the worm. Okay, stops. With the love of my wife. Training here. Give the Canadian Mountie voice. Good morning. Morning, everyone. Zach. Well, he was, but got out that fast. Good morning. You called the drop body. Well done. Yeah, but I'm not in it. I was in it, then I was out of it, and then I got frazzled, and then I was out. So had I stayed in it a little while longer, and the weird thing is I had my stop loss sitting right there at the rejection block. And what have I told you guys about the rejection block? Pay yourself at the rejection block. It literally came up to the rejection block, hit me, took me out of my trade, and went lower. If I would have just put that up a couple of more ticks above that, I'd still be in this race on the way down. It's so painful. It is so painful to see it because I thought, well, if we start taking this out on the close, then I'm on the wrong side of that. And it did. And the stop was right there. Ugh, it's funny. Like you couldn't have asked for better to come back and take me out right there. Frustratio. Very frustrating. And it's funny because I was looking back and saying, where should I have seen this reversal here? There must have been a reversal in here. But then when you go down and you look at this, and it caught me, it wasn't until I'd already taken it out. I was like, why did we get this run up into here? You see it right here? This low was taken. Imbalance is no different than looking for a fair value gap. This imbalance, we traded above it. Look at this. We trade right back into it. Bing, bing, twice. And now all of a sudden we've got to change in direction. We've got to change in direction. Break in structure. Trade above it. You come back to it. Trade all the way back up into rejection block. Bing, hit it perfectly. Then snap down away from it. So you see this reversal here. Now that we've taken out these highs. And now it trades back into it for a short. Didn't take it there. I'd already got beat up on that run back up. So either wait for this to take the downside, it does, and wait for it to trade back into that right there. I didn't see it here. I must have been on a different chart because I didn't see this return to a perfect opportunity at short. So then I was looking for, do we get an opportunity to come back to that daily fair value gap to go lower? So I missed a couple of other key opportunities to get in on that short. Uh, but we still might get this return back into here first before running lower. But you got to play the ranges that you're in now because they're creating these small little reversals. And this range that you're in here, 50%, 62%. So you're always trading this because if it's wrong and it trades back against you, at least you can catch a portion of the run back up. So that's why I like to use a fib tool, kind of save your ass if you're on the wrong side of that. It was only 80 handles. Yeah. Thanks, buddy. Only 80 handles with a one lot trade would have been a dandy little run. That's what happens when you mess around with Bitcoin. Michael warned you. don't this Bitcoin. I love to practice and play on Bitcoin in demo accounts on the weekends. I don't like to actually trade that with live dollars. It's fun to trade it, but you wouldn't want to put your my real money in that just because it's such an unpredictable thing. But it sure is fun to trade on the weekends. Oh, gold. Oh, I'm up 7 grand in gold. I got this trade off of gold this morning. I forgot about this one. I guess I should have moved my stop loss, hey? Move that one into some profits. I went long on gold off of this reversal here this morning. See this significant down candle? We traded back up, and this is the candle I was interested in. And with the fact that we've kind of ran up above it, I thought I like that for a long run because this has given us a nice significant break above this reversal here. So I got long there, and gold is on a little tear here. So let's move. So the fail safe is if we take these two candles out on the downside, then it's reversing. So protect what you got. That's where my stop loss is sitting for gold. Google's looking very strong. I have calls for 200. So there's the reversal. See right there? This is back inside this range now. So many things to follow. Hit CE of the opening gap. Breakers 831. So I'm looking right here right now. So you have to have taken that below that low. In my eyes, you have to see that as a discount. When you hit 50%, break even, take a chunk off, even though it's really small. Because if this is just 50%, 62%, and it reverses on you and takes you out, that little entrance there to there, it's probably only like 5 handles, 10 handles. What is that? It's literally 6 handles. Take half of it off, move to break even. If it hit 62%, you'd move to 50. So we're just shy of 62% right now. Again, that's not any reason to get super excited about trading, but if you're in a range and this has the potential to keep coming down to this fair value gap, which some people are aiming for, then I'd still like to see it get back into here first before we go lower, like 700, 714, 710 would be a really nice hit, and then go lower. So, and someone mentions Google. Let's have a look at Google. What is the thing for Google? Google. Was this Google? Alphabet Incorporated? And you're going long on this? You have calls out to 200. I like that. It's definitely looking good. Right off today. Yeah, I think your next upside objective is going to be that would be the next upside objective for me in Google, if I was looking for Google. So we're taking you, almost getting ready to take you out of your trade. Half is off. You got 6 handles. Again, it's a simple little rule, but if it goes against you, things to fall. G-O-O-G. So I was on the wrong one. So wherever the alphabet incorporated is, that's the upside. I thought look at that. G-O-O-G. Goog. Oh yeah, that was the one. Yep, same place. Same objective. See, this is a good example of it. If it trades back against you, you make 6 handles, it trades back against you, the other half of your trade is off at break even. So now you wait. Wait. You've been in for some time. Good for you. Morning, Edgar. Still in. We're still in changing either direction, higher or lower. In here, we're right in equilibrium. So nothing. I got nothing on ES right now. I still like Dow Jones for a big chunk drop down. I like to see Dow just hovering here during the election, kind of give people this false hope that it's coming back up into this reversal here. Leave this portion open and just smash it. Dixie's back, find some support off these old highs here. We want to see that last little portion stay open in this fair value gap. If it just dips down in here right now, that'd be a nice opportunity to go long, all the way down into the consequent encroachment of the BISI, and then go higher and leave that last portion open. So that would put a downward pressure on the, so we're back into this candle and this one. So if you just run up into the half the wick or this body, roll over, come back down, look for further downside pressure, and if Dixie holds price, and we get a little retracement here, back into this old high, so drops another 6 pips, 60 pips, yeah, 60 pips. If it drops another 60 pips back into here, look for a run higher for the rest of the day. And look for, oh, it's already hit the upside objective already, so we could look for all the way up into 104.395 is an upside objective, and then we'll see how we act from there on the next hour or so. Let's euro dollar. We may see it. Okay, before I was seeing something different there. If we just sweep this high here back into equilibrium, or sorry, consequent encroachment of the SIBI, watch that level for support for a reversal to take out all these lows. If the American dollar continues to climb higher, it should put downward pressure on the foreign currencies. Oil. Are you going to give me oil now? Man, oh man. Okay, it's just shut me right down. I can't click anything in that. Let's just completely eliminate it and we'll start again. Unnamed chart. We will call it CL December contract. And let's split that into the three. I do like this one. I'll put this as this shall be the hourly. This will be the 15. And this will be the 1. It's got a nice little gap up there. Holy. I got nothing in there right now. Get back into this candle. Leave that open. Could trade all the way back into here though. Fill that. See that? Just shy of 62%. Come back down in the range. Take out the low. That little downside one on the downside. And you go, oops, I'm on the wrong side of that. It's going to keep coming lower. Comes lower. Hasn't really, other than this little swing here, we haven't seen any significant take. So if we do get a trade above this candle again on the close, I want to see this breaking structure to the upside happen all over again before we start considering going higher. Talk about rejection block again, hey? So there's the reversal. Pay yourself at rejection blocks. Literally pops into that rejection block and then kicks away. The real fireworks of today is going to be after the bell with all that tech earnings. Morning, Ollie. So the next few minutes. Where's our gold? Gold come down and take me out. It did. There's the reversal. Then we know we've got the wrong side. If I had been keep on watching that, you would have seen it right here instead. I could have moved my stop loss up into here. As soon as it breaks that, you did not get support at it though. So you break your market structure down here, pops back up. We still haven't got anything back in here, so that's why you use your fail safe. Otherwise, all that profit, mind you, that was almost half. It was like 8 grand up there, I think, and I had it at 4,000 something. So it's thrown away half your profits just on that return back down into here. But whatever. It was a profitable morning for that. Got to break market structure here. Through this already on the downside. Let's wait for the at 30. I'm just gonna go grab a coffee. I'll be right back, guys. If the open doesn't take us up, that signals a stronger move down, as I would see. Thoughts? Yeah. If we didn't get a chance to try and get back into this, it's like looking super heavy today. I agree with you, Derek. You'd hope that that would have given us a little retracement, but you know, you still might get it for 10 o'clock and then look for a 10 o'clock reversal. Morning, Shepard. I don't like the fact that even though we took this low out here, the fact that we've come all the way back through this candle again. We have this, we want to stay on the other side, this side of this reverse here. If we get on that side of it, then you're looking back into a bullish run inside that Rangian, and then look for this high and this high to find support. And then you've got your run back into 10 o'clock, Derek. Oh yeah, look at that. Regular trading hours. 706. I might not have mine sitting on there. Wait for the range to settle itself out. We might just get the big dive down in there. Well, there's a small little Wednesday volume imbalance right here. The 15-minute chart looks ominous for a downside though. Back to the consolidation in the lower 500s. Yeah, I agree. This is smart money reversal, low risk sell right here. And then we've got, I'd like to see a second level of distribution here, like accumulation and then a distribution for unicorn setup for a drive down below the original consolidation if this is a market maker sell on the 1 hour. On the 15-minute. You see, I'd like to see that just come back up into here. Even if it comes back up to 682 and then starts hammering it down. I'm looking at now 657. You get a second level of distribution. Take out the original consolidation here for a big unicorn slam down. On a 15-minute chart, that's what I'd be looking for here. I'm not going to chase price here on a 15, 1 minute or whatever. So I want to see, oops, put that back there. If it's gone without me, it's just gone. No first presentation yet there, Zach. Abs gap. I'm just reading it now. Abs. Mm. Good morning, Darren community. I was just reading your telegram there, Abs. I think we're gonna have to call that Abs gap. I love it. It's great. It's the first video we have of the week now. See what happens here. How many handles is that now, Derek, that I missed out on? I got taken out completely and missed the opportunity right here. That's where it took me out. 720. Yeah, we're only down. Here we go. It's only going to be 200 handles, Derek, that I missed out on with precision, I might add. Oh man, what is 200 handles at one lot cost? Does that give you a couple $100 maybe? A couple of grand maybe? Well, there you go, right to the top of that fair value gap. First port of call. Yeah, it's a big big down day. What is Dow Jones doing? Is Dow giving me the plummet yet? It's a daily, so I probably won't see it for a while yet. So looking for NASDAQ to get back into this imbalance here at 480. If we can get through 480, look for yesterday's low to get taken. But even the consequent encroachment of that wick, yesterday's wick, will put you into the 480 range. So there's still more cherries to be picked. So my concern here is that if we run down here to this consolidation and we come into 50% of that and reverse and we don't take out that consolidation here and we just come back, fill this fair value gap at 526, How we act off 526 is important for me now because we're back into this. We're into the breaker now that takes out all these highs. We're starting to get into an area of sensitivity there now. So if you have paid yourself along the way, excellent. Just keep your eyes peeled now for potential reversals. If it does come down to 448, like we're looking at there on the daily, I think it was. Yeah, if we get back into this imbalance right here at 480 to 505, we got a nice little chunk to go, 480 to 505. That'll put us in the middle of the consolidation. So that's where ideally where you want to see that for a CAM2 model. You want to see CAM models before they come back to them, but they are possible to come back, hit them, and then finally leave. So this is our new day opening, our first presentation. That's right. Sindura, you just sit back now and enjoy the fruits of your labor of waiting. How'd you like to earn money by watching candles paint? Huddy's like, there's a 15-second reversal. There certainly is. I do like that, Huddy. Come down, give that a little tap right there. I'd like to see that hold there. Yeah, I ran into your channel a few days ago and you got a new subscriber, sir. Well, that's excellent. Thank you very much. Appreciate any new subscribers. We're here to do our thing, help people out along the way if we can. Michael spoke yesterday or Monday about the attraction of grouped new week opening gaps and new day opening gaps nested together to each other. Oh yeah, I haven't. I'm like on October 7th or something like that for his group. I haven't actually caught up to. There's a little spot right there. I'm out of that. I see a little reversal here. Gonna wait till we come back into this range. I'd like to see this get back into 50% of that small little range there. Gonna have to keep going higher. Yeah, I'm like October uh, 7th or 9th or something like that. I haven't caught up to all of his videos yet. There you go. It's going higher. And I'd like to see that get back into the objective would be up here at this regular trading hours, well, that first fair value gap presentation as an upside objective. Come back into here one more time. I'm all right with that. Off of this stop would go down here. Macro time. If we could close above that, Sippy, I think we're off to the races. Yeah, we're off 62% here, so right back and tap that one more time. I refuse to lose money, so She came down and kissed, promised me kisses. Look at that, right to the fair value gap, right short of that opening price, just below the opening price. Came down, tapped that opening price of that candle. Now it's gone higher. That's like playing chicken with a train right there. There's 70, 75, 78. We'll let her buck now. Let's see if we can't get it up here. There's 78% there. That's 88. So if it runs through 88, then I'll let it go. See if we can't get it going higher. Lock in profits here. If it comes back to 78%, then I don't want to see that order block get taken on the downside. This one here, I want to see it close above it and find support at that. Then my stop loss will sit right in here. How many times does it come back and give me a little stare in the eye, run down it, playing chicken with me here? Look at that. It literally must have been like half a pip or half a handle there from taking me out. It'll probably go here now. There, it finally got me. So now, next thing I want to see is this candle here taken to the upside. If that reverses right here now, there's the rejection block again. It hit it. If it takes out that candle on the downside, comes back, finds support at it. Oh no, it's working here. I could still go higher. That's all right. I'm happy with 600, whatever that was. That's that range done. Now, I won't consider getting back into that till we get above that candle, till we get a break in structure. When you have a moment, can you show where you could have entered on the 1 minute chart? Where I could have entered what for the long, you mean? So the first one is right here. As soon as you get a body trade above that right there, and then it came back to the high right there, there's a precision entry for you. Then I looked, it had already left here, so I looked at this for this next one. As soon as we get a body trade above that, if it trades back into that candle there, then you can get long. So we got long from there off that candle. You could have got this one here if you're looking at absolute precision on that level. Body trades above, comes back in. Even this one here comes all the way back in. Nice clean body above, retraces back into that candle's high, and then off you go. Pull your fib tool on the range like we did, and then start trading it up. And because I've only got one lot on there, I kind of chase it up behind it. So as soon as it hits that 50% move to break even right off the bat, and you're I guess you're kind of gambling because you can't take half off. and you wait. If you're trading micros, it's better because you can just kind of take off a micro at 50 and scale out all the way up here. So if this reverses now, comes all the way back down, you'd be happy that you got scaled up way up here. But it doesn't look like it's doing that. It looks like it's going higher. So we'll wait till the body gets above here. And don't forget, you're in a premium part of this range. So you want to start looking for these highs here and back into that regular trading hour gap. So right here, wait for a body to get up out here. 2, 1. There you go. There's a body above. You got this old high here. Consolidation. Cam 1. If you can touch the top of it, all the way down into the wick or into the body. There you go. Right there. Hit it. Now you want to see it go higher. I entered at 589. Nice. There we're up into that daily fair value gap now. Or sorry, that first presentation. Now you've got reversal potential here. So if we lose these candles on the downside, then we're coming back into that range. But I like this upside objective right now. If we can continue motoring the way we are off this candle, find support of that and start pushing through our fair value gap first presentation and use it for leverage to go higher, then you're starting to dig back into that regular trading hours gap above us. I can see opportunities on the 15-second, but not on the 1 minute. Yeah, the 15-second is, sorry, I should be on the 1 minute for you guys. Some of you guys don't have the 1 minute opportunity. But see, we're back to this candle again. Find support at it, push higher. Find support at this candle's open now. I like the fact we're digging into this first presentation. If we can get through it, use it for support one more time and start pushing higher. Like that. Go along on that. And I'm not going to sit on the rejection block this time. Now, because it's late in the game, I'm just going to chase each candle up. Just because it's late, we're into this rejection block. And if this has got any intentions of really driving higher, then this candle here should find support. And it took me up. I want to see a body get above here on the close. It's filled that. This is another one of those rejection block times. Or as if it reverses, comes all the way back down here. Then you're like, damn it, hit the rejection. I was looking for it to go back into the regular trading hours gap. I wanted to see it tear through that. And then all of a sudden you see the reverse happening right here on a 15-second chart. So if we break below this low here, then you start going, crap, that rejection block took us again, right? It comes back, finds support off that first presentation again, and starts to blow through. That's a good sign. Start going from there. No entry on the 1 minute. Sorry, let me go to the 1 minute for you here. Let's have a look. Off this regular, or that first presentation, fair value gap at 939, your 1 minute was body trades above it right here, trades back into it here, to long inside this range. If you take out that high, you look for a body to break above it. It does right here. Trades back into it here for continuation. You want to see that candle's high get taken on the upside now, and then trade back into it for a continuation back into the regular trading hours, consequent encroachment. So that's all I can see there for that Campione. For this range, you already maxed out at it, so you want to see a big bold candle get through that, come back and use this as for support, not just wick through this. So you want to see something significant here. And any opportunity now you see a reversal forming on a lower time frame, like a 15-second, we just wait for Hadi to give us the call because you know he's looking at it. And then you want to see it dig down below that 15-second. It'll probably be inside this candle here. Get below it, find support at it, and continue coming back down. If not, if this has got more upside now, I'd like to see it hover just below this, create a swing down into here, and then a reverse, and then you can get a projection on where we could be reaching for the upside. Like if we get a nice little pullback in here before we take out these highs, like it's the crouching tiger scenario where it just crouches below here, and we get a nice little retracement into here, and use that for support to go higher, because we're inside this candle here originally, but I like this big one is buried. This one is buried inside this big candle. So if we can get another retracement back into the candle's close before taking these highs. And I guess not. I guess we're not getting that. So you wait till we got wick above the highs now. Consequent encroachments are next upside objective for regular trading hours. Come back, find support at the high. See that right there? Body literally closed at that high, came back inside it, and now you're looking for higher prices. I like this old high cam model pop above. On the lower time frame, you'll probably see a cam model sitting in there somewhere. Nope, it's just been a slow, steady grind all the way up. We haven't had any structure breaks here on the downside yet. So to manage my management of that, looking at that order block, saying I didn't want to lose the order block, that's all fine. But inside that range, there's nothing here there's no reversal there. So technically, me wanting that candle not to get broken inside a small range like this to 50% or higher for bullishness, I should have given it at least 50% or at least two candles here on the downside. Because if you break these two on the downside, then we've got a reversal going. But that was quite a lot of profits to give up to do that. But that's the logic behind it. So you should have been prepared to give up that kind of range for continuation, because that literally again came down just enough to take me up for continuation higher. So now there's a big dig into here. We haven't got a full body above here yet. See, it's literally closing on it. Wicks cleared out all this, so you got to be prepared for a sudden change in direction here now that we've taken out these highs. Looking to go long off of this candle when you haven't got a full body, and you want to see a big displacement candle get above that to give you your entrance, not just a small little, is it closing on it, above it? Start looking for all that with these little wicks forming. Just wait. How's all these other ones doing? How's our Mr. Jones? Mr. Jones. So this is good. I don't mind seeing a consolidation here, run up next week for a slam down. Like after the you can just see this poised for an election slam or an election gun for these highs. Right now it's sitting in a bearish stance, but we haven't broken market structure to the downside. So they're hovering just about, see this? There's just drop down there below that. That to me tells me the algorithm's going, guess where I'm going to go? Guess where I'm going to go? I'm going to give people this false sense that I'm going to keep pushing this higher, and I'm slamming the sucker down. So right now, this right here is, for me, it's not a Michaelism. It's just for me, it says to me, I'm giving you a hint where I'm going in the next few weeks or next few days. And now we'll see if this is true. And we can pull all the way back into here. 42,984. I'll even put that as an upside potential. And then turn around and hammer it down. If it starts digging through that on a close, then I'm wrong. We are going for higher highs. Russell's on 3 for 3 now. 2 on micro NQ and 1 on MYM demo trades for the rest of the day. Smart man. Smart man. Demo this. I'm with you. Demo. I've got my little run for the day, so I'm gonna demo trade it. I'm gonna copy you, Russell. It's Wednesday. You don't want to give back any profits for the week. So where are we sitting right now? You see how we're just all cleaned out this liquidity with wicks. See how the bodies are respecting the highs, and the wicks have just gone in there and just we're sitting in here gathering up orders. So are we gathering up orders that are trailed down here for shorts? They're gathering those guys up to slam down and finally take out these lows and really start pushing lower into that consolidation on the higher time frame. Like when you look at the 1 hour, see how we look for a run on the daily high or the low. Okay, so see how we've got this pull back into here. We may not get this run back in here. We may just see this pop into here with an optimum trade entry reversal or institutional order flow entry drill, and we don't get that filled. This would be that one of those classic times Mecca would say everybody's looking for it to run back into here, but you just get institutional order flow and it just leaves that gap open and then slams back down again, looking for a run through the consequent encroachment of the wick and then start running through into this consolidation below us. So those are the kind of things I'm looking at for right now. And when I'm looking at this, I'm thinking you're just gathering up a whole ton of these little guys that have been trailing their stop losses down, trying to keep their profits. We're gathering them up and then run back up a little higher, gather up some more, get into this rejection or a regular trading hour gap. I could see, yeah, right there, regular trading hour consequent encroachment, and then roll over from there and just start running back against all these people. You've gathered up enough orders now back here to gun for this consolidation. What say you guys? What do you think? Yes, no? Yeah, regular RTH equals regular trading hours. It's a gap that occurs during the regular trading hours, like between, oops, go back that one. This is the one you want. See that gap between yesterday's close and today's open? That's called a regular trading hour gap. And when you start to trade back up into it, we're looking for a consequent encroachment, a good run on that. And look where that lines up inside this range. If I was going to put my magic box somewhere, where would you guys put your magic box? I don't know why I keep calling it magic box because it's magic. I think it's just so beautiful. That would be a great place to put my little area of interest as an upside objective. That's your regular trading hours. And what are we in? We're 1819. We're in the squabblers right now. So we want to see this candle hold price all the way through here. If you want to go higher, you want to see this hold price. Oops. I guess you could say this one here because this body's higher than this one. That's the breaker. That's a breaker. Takes out a low, takes out a low. Yeah, let me revamp that, sorry. It's not much different from that high anyway. and this low. I don't want to see you getting lower than that. There you go. That's where we want to be. I like that, bouncing off the consequent encroachment of or mean threshold of that breaker. We have a displacement candle come back into these old highs here like that. I can't wait to learn how to trade ES and NQ. All I make money on is crude oil and natural gas. You know what? That's a terrible place to be, is making money off of crude oil and natural gas. Hey, if you're making money, man, who cares what other, don't worry about all these other charts. If you're making money off of crude, stick with it, man. I had a buddy of mine that we used to trade oil all the time. It was a great one to trade. Look at that, right off that breaker again. That's what you want to see, a cam model 1 entry, and now you want to see that leave. Get out of Dodge, start heading up into this little box here. That will be my upside objective, and we'll see how we act off of that. Um, I like the idea, go against them and just waffle around all day until the end of the day. Oh, that's neat. I'm guessing that's just on futures, not on CFDs. It's on everything, man. CFDs, everything. Nothing I'm telling you now is not on any other chart or any other asset, or if it's very driven by the algorithm, or in other words, by these candles, and it's in the market, it's algorithmically driven, and that's all the same thing. Sundura, just have a look, man, you'll see it. Or just give me the CFD that you want me to look at, and I'll show you how it works. I agree. That it will go again to the first fair value gap of the week and then climb a little, but not much, too much prepared for a low price and NFPR new historic high and show the economy is strong before the election. Yeah, that's the big manipulation. Hey, Edgar, you're not. It's there's so much that you could say that they're going to prop the markets up. Those are all speculations. In the end, I have to stick with what's the technicals. What's the truly, where are we sitting right now in a 1 minute chart? Where are we relative to all that noise that we're hearing in the markets? Those are all speculations. And for me, it takes you off the pure technical analysis. You can guess and wonder and worry all you want. But what we're seeing right now is exactly what we want to see. We want to see it bounce off that breaker, and we want to see it climb higher. I don't care what's going on, how many votes and how many ballot boxes they're burning and all that other shit that's screwing people around right now. That is what you're looking for with precision still, and that's my upside objective. And then your stop loss will be sitting right below this low. Because for me, that means you're breaking through the midpoint of this to the downside, then they're just cleaning these guys out to run the low, come back support off of that, and come back into the range. So just keep sticking with the technical stuff. Don't let all that other stuff influence you right now, other than keeping your leverage really low, and be careful for sudden manipulations that somebody's hitting the button and spinning off the algo in a different direction. Right now, as the algorithm's still ticking away, it's still doing what we want it to do off of precision levels. So that's what I'm going to stick with for analysis wise. I'm not going to let myself get all hung up on that old crap that you hear in the talking heads and all that stuff. I meant adjusting regular trading hours and electronic trading hours on CFDs. I'm not seeing the option to swap. Oh, yeah, no, I don't know about that particular thing for over here, you mean? Yeah. So now I'll be moving into break even. You're halfway to your objective. So another method you could do is just looking at, this is the consolidation. So this is technically the bottom of where you don't want it to come back to. If that's the high, oops, if that's the high in terms of the immediate objective I want to aim for, because I want to really protect my trade, then I'd move to break even the moment you hit 50% of the distance between where you went in and where you want to go. Oops, I got this rolling around the wrong way. Stand by. So 62%, you'd be up to 50, take you out right there if you're using the fib tool method. But we've got another cam model entry. If you lose 50% of that on a close, it's probably going to run for the low. So we're back to a cam model 1 entry again. So here's, look, you pay yourself on the way up, 62%, take shot at 50, come back, put your trade on again, runs back up to 50%, move to break even, 50%, 62, so on and so forth until we get our objective. So it's like, oh, here, I want to give you some money, let's do it again. I want to give you some money, let's do it again. And your stop loss is always sitting down here as a logical reason for, if we break this, this is a CAM 3 model potential setup. Now, don't forget, we already run out that liquidity above here. So you always want to be prepared for where does this switch up on us. See how we got an immediate rebalance here? This immediate rebalance is, for me, is classified as a fair value gap as well. So as Michael says, immediate rebalances are fair value gaps. So that becomes the fair value gap that if we take this on the downside, we now got a reversal. So again, it supports that consolidation of your stop loss being down here. So there's 50%. You'd move to break even again. Take a portion off. If you're in one handle, then you just, or one contract, 62, move it right up to 50. You're in profit automatically as soon as it hits 62. Right there, you'd be into 100% profitability. You can't take a portion off there, so when it's 70, so you're still sitting here. There'd be hopefully a portion off there if you could take it off. There's 70, you'd move to 62. Poof, and that just take you out right there. So didn't get your objective, but you got paid here. You got paid again. And if it comes back down into the highs here one more time, start her over again. Just a trade, a model idea, not that you have to do that, or even if it's even makes sense to you, you might just go, that's ridiculous, I'm not doing that. That's fine too. How does that rebalance works? As in how to identify, how does the rebalance work? Oh, this right here, you mean? Curry fishbowl? When Michael talks about, if we get on the very next candle, if we get a displacement candle or a bold candle going up, and this candle comes all the way back to this candle's high and immediately rebalances it, and usually you'll see it come back up, leave a little gap or something like that. But when it comes back immediately and rebalances that on a wick and then snaps away from it, we treat it like a fair value gap. And you see how that rebalanced now, if you look at this as a fair value gap, watch what happens with the wicks. When you go like this, you treat that right from that candle's high to its open there. Oops. So from this candle's high, oops, right here. Now watch when you stretch them out. If I stretch this out, see how this now becomes the fair value gap? Look at the 50%, 50%, 50%. We don't dig all the way down into that lower. Once we've rebalanced it, you come back in one time, uh, again, inside that candle. I guess you could consider that a rebalance of the fair value gap, but I like the fact that we just come back and we're just re-hitting that 50% before we move away and take out a previous high right here. Fair value gap. If we get this taken on the downside, watch to see that this break-in structure down here doesn't get taken for a continuation lower. So that's that immediate rebalance. Watch for immediate rebalance wicks, and it's going to be a wick that snaps down and then just pulls right back up and then continues going. You treat that like a fair value gap. It's in his material, so I don't know which video it's in. Use the ICT index.io. That's an AI that's created for ICT users, and you can go in there, type in any question, and it will find anything that micro-referenced that question in all of his videos, and it will give you the video that you're looking for. It's awesome, and it's free, so it's incredible. I suggest you all use that. Don't listen to what I'm saying in terms of, you hear me, I call everything a fair value gap, and I have to change it around. I use get my mouth just runs before my brain does. So if you want it right from the horse, just go straight to the ICT index, and it will give it to you, and he'll explain it, answer your question through the AI, and it's his words, it's his videos. It'll give you the reference to the video and everything as well. So definitely use that. Now we'll watch and see how that acts off of there. I've had so much coffee now, I have to have a quick pee, so I'll be right back. Okay, can you hear me? Yep. So I want to share with you guys something I'm going to put in my journal entry for today. Was I started feeling quite anxious about the fact that it came back here and took me out for this right at the rejection block, and then I saw it running away after talking to Derek this morning about when it was up here, talking about it going lower, and then getting taken out right on that rejection block, like to precision. It took me out. I was feeling like, oh man, I started getting all this negative thoughts going through my head. And as it further as it got away from me further and wasn't coming back to that level, I started running all the way down here. I started getting kind of annoyed with myself, like, man, I can't believe you did that. And then it's like, wait. That negative thoughts that start to chase after you, you start to get distracted by the potential for reversals and missing out on that opportunity. And that's kind of something to document in terms of the psychology of, hey man, that started getting away from me. I made a poor choice. My entrance was obviously not as good as it should have been. I should have waited for here. Shoulda, coulda, woulda. So I have to reframe that now when I make that journal entry into something positive and say, you were so precise on your rejection block and how you've told people in the past the rejection block is trade to. How beautiful was that as a nice return to that exact place you were talking about as a return? Next time, place one or two uh, points or ticks above and let her buck. See what happens from there. But excellent call on the downside today, and excellent reminder about the rejection block. So I got to turn it into something positive and not that negative crap, because you want to continuously feed your brain with positive thoughts, and don't beat yourself up on your trades. Believe me, I did that for many years. Many years. I've only been doing it for 8, but you know, I've done it many times in the 8 years. Edgar, it's go to the ICT or ICTindex.io. ICTindex.io. Type that in there, and then whatever question you type in there, it'll it'll search. So you'll say like, what is a immediate rebalance, and then it will literally go through all of his material like in a fraction of a second that he's posted on the internet, and will give you references. It'll give it to you in text format, and it will give it to you in video format, and it'll bring you right to all the different references from multiple different videos where he's talked about that, and then you just hit play, and it starts right in the middle of the video, discussing right at the point where you to answer your question. So you get all these live streamers out there talking ICT lingo, especially me, because I don't give you the pure words for technical. I just give you what I see as the pure technical stuff, and it does line up with Michael's words. I just probably might be using the wrong ones because I focus more on I just want to see the perfect place to get in, and not the words that I should be using. And I know I'm live presenting now, so I should try to keep it as accurately as I can. But anyway, that's where, see how we've got this reverse right here, right back up inside it here. That's concerning for not reaching that spot right now. So if that pulls short, and now we've already traded below here, I want to see a body get below here now for continuation, potentially back into this midpoint and lower. if we can trade above here on a close and use this candle and this old high, that's still back in the swing for an objective. So looking at this small little consolidating area here, these are the areas we start keying on. That candle, or this fair value gap here, BISI, and that old high for this objective. Yeah, Edgar, it's the best tool to put in your bookmarks. Put it in your bookmarks, ask question, go right there and let the horse explain it to you. He does a far better job than any of us on the internet could ever do. Another wisdom gem given to newbies like me. Well, I'm glad it helped you, Edgar. I'm glad it helped. Look at all these cam 1 entry, pull your fib tool, run it up, start again, run it up, start it again. Now if that's 50% of the range again, multiple times, if that's my upside objective. You got consolidation, consolidation, and there's nothing in between. Usually when you're doing cam model trading from one cam model to another, you usually trade the distance between. So if this was consolidating here, you traded back up, you traded below it and into it, you'd be trading the distance between that cam's high and that cam's low. Sorry, that cam's low, that cam's high, and you trade your liquidity inside that and wait for a breakthrough on either side or support to come back up inside that range again. So when you got this consolidation, they're literally sitting on top of each other. There's nothing to trade in between here other than just consolidate, hold, keep running for a higher objective, and you want to see this keep pushing through. Don't forget you still have this here. Now that you've had that high taken, these two candles become important. So it's not really so much this anymore as that candle right there. It's low. You do not want to see that get taken on a body close. Look how many times the body's come close, ran back up, right into that premium array, which is what we're looking for in a higher time frame right here. That's this guy right here. It's hit it multiple times, and see how it's kind of rolling over here. You don't want to lose the midpoint of this, and then back to the breaker again. So as it's consolidating, ask yourself, do you want to be in this? Do you want to be participating in this? You see how the regular trading hours gap, constant encroachment, lines up with the bottom of our box. Mags. Some new fella. Mags. Even with full volume, it's so difficult to hear you. Is it just me or is it the volume low? Can you guys hear me? How's your, let me check my status here. Testing 1 2 1 2. Yeah, we're up here. Do you want me to bump that up a bit more? That's maxed out right now. So hopefully that helps you guys. That's right up near the red here now when I'm talking. So I hope that helps. Does that help you, Mags? Can you hear me better? It's his morning. I love you, honey voice. Good morning. 5 by 5, says Edgar. That was better. It was low volume. Now it's cool. Perfect. All right, there you go. Happy wife, happy life. There you go. No worries, Mags. I'll leave it maxed out then. This headset. I noticed there, you guys can't hear any of the fan working in the background now. My brother gave me a headset to use, so I think I'm going to keep this. And I'm going to use it for all my away days. And I've just ordered some extra screens. You can get these little like portable screens you can take with you, like really small, and you can put them in a backpack and add them as extensions on your laptop. So you've got a screen on either side. So you got three screens for your laptop. And I thought, oh, that'd be awesome. So when I'm with you guys, I've got three different screens I can use. Plus, I have you guys on my iPad over here for communications wise. So I love that idea for traveling. So I'll have my own little office I can do on a travel if I go on a vacation somewhere. It's not just one screen I'm trading on. I can split this stuff up and let's move this along here. See how we've now got a body below this level right here, right there. Body trades below it, comes back up, gives it a kiss, and we're going lower. Now we're coming back into, are we going to give up the 50% of that range? So are we really trading into here, find some support off that breaker again and start to push higher? Or is that it? We didn't reach that upside objective in the higher time frame when you pull the fib tool from high to low here. Is this an optimum trade entry reversal on a 1 minute chart? Well, you've already seen right here, it's tipping its hat. I want to go lower. So now I'm bearish and we'll see how we act inside here. I'm bearish just inside the small little consolidation to consolidation range, and even more bearish if we can get below that candle's low there. But it's already tipping its hat lower. Remember I was talking about how you see how it's rolling over here, and that's your fair value gap reversal. So you've got reverse swing. We take out a little market structure break here, come back inside it, find some support. Now you want to see really get digging into this consolidation and take out the lows. 10:30 reversal. Oh yeah, that's right, Derek. Good call, buddy. Yeah, it's a small fair value gap right here. We've been kind of watching that for a while now. I'm waiting for a body to get there. Did not take it. Back inside. Work, 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 work. And then it rolls over. Finally takes that low. Comes back into it. Trades into it right there. And now we're going lower. Now we want to see the 50% of that consolidation get taken. And then these three candles to the downside. And we've got another run back into this range here then. Keeping in mind we're still inside this breaker. So you want to see this breaker give way on the downside for further confirmation. So you got like, this is the hint. Guess where I'm going? It's giving you the start. Hey, I've got confirmation here that we're going lower, and here's your guarantee you're going lower. Once we take out that breaker on the downside, we get a nice big bold candle, come back through it, into it, then we're looking for a deeper run and back into the range. Then I'd be putting my magic box down back into this Monday's first presentation. And watch, see how we're not coming, we're through it, we keep hitting that midpoint right there. Watch, if I take this. So these are the kind of things I look for in terms of consolidations. Oh, it's already done it. I don't have to show you now, it's already done. See how it broke through that remove. We got our hint that we're going lower, and now all of a sudden we busted right through that with a quick displacement candle. So good. Watch here for the next 4 seconds. Body's below it, trade back into it. Breaker, watch the breaker give way. And there's your reversal, Derek. Don't you love it when a plan comes together? "26 people get to enjoy this. Live calls. We're calling it, you guys. Look at Derek. He's all over this morning. Calling directions. There's a couple of you guys have called some good directions today. There, now we've traded below that. Look at the kiss off of here. Back into the breaker. We just traded below it right there. Now you want to see that just start. Let's go short on that. This is just a demo balling. Did it go short? Oh well, I missed it. I thought that was going to go. I thought that was going to take me. Anyway, we're going to pretend it actually would have followed through on that click I just gave it for a short off of that breaker. Yeah, between 10:30 and 11, you usually see a retracement back on the range for the day that it was created. They like to retrace back on that. And 10:30 and 11, you usually see that. And you got to go to Michael's material to understand time and price. I love the fact that we didn't reach that, but we did see we saw the reversal setting itself up. We talked about the rollover, and then when it finally broke that, we caught that right at that moment. We saw it going down. We wanted to see it break through 50% of this. It did. It closed below it. Then we said we'd like to see it come back up into that for consolidation, for a continuation on the downside. It's coming in there now. We wanted to see the breaker get taken on the downside. It did. So anything of a retracement back into here, I'd like to see this portion stay open for continuation on the downside. So I'm going to try going short right there, right off this. So I wouldn't want to see that close in. So stop loss will go just above here. Sorry, above that next one, up there on the upside. We have already hit that, so I wouldn't want to see us come all the way back into here. This is the level I want to see give us that support now, and start driving lower. And as soon as it takes out that low, I'm going to move it right into profitability anyway. I'm looking at this see, I use words that are not, it's not a consolidation, this range, and you're looking for 50%, and we'll start pulling it down. I just want to show you that 50% range, that whole wick, or fair value gap. Sorry, fib tool technique for managing internal range liquidity. And this is just demo balling it now, so Not that you have to take the same trade I am. It's just demo. We're only demoing it. Got short at 673 of the wick. Six, 7, 3. So you caught off to here. That's not a 2024, by the way. Or sorry, not 2020. I was thinking 2022. It is 2024 style. Yeah. Okay, took me out. Back into consolidation again. Right off that low, right there. I'm off this low here. I want to see that whole price. I don't like the fact that we've refilled this. So if we go above the break, this little breaker here again, then I'm on the wrong side of that. And we haven't hit 50% yet. See how it closed right on that fair value gap swing? I do not want to see a body get above that. That's why I'm looking at this level. If we start to revisit this wick again, I'm closing that out. I'm out. We're going higher. We're coming inside this range again. You got a couple of tweezers going on there for retail people. Bodies still have not closed above it. They're going to give me 2 for flinching. I flinched, saw that go up and was like, no, I don't see that, revisit that. Now it says, haha, sucker, I did not close above that level. And you preaching that? How many times you preach that? I got you. You got me right there. So for me now, because that closed out my stop loss, or I just closed the trade out because I was just anticipating it might go higher, just because that candle went up there, I got pulled in on the body. It would have to take this candle's low here for me to start getting back into that again. Because right now I've got a potential reversal for a swing right here. And it's just come back and filled that. If it starts to climb higher now, we've got one that goes higher and we have one that goes shorter. So if you want that short to hold, we cannot get back through here. And revisiting it multiple times is not a good sign. So when you look at that there, opportunity to get out of the trade if a body closed above, and it hasn't. If the body closes above it now, I can sit there and go, ha ha ha, and you can peacock around after the fact. But right now, they got me 2 for flinching. I flinched, got out, and right now it's sitting between going down and going up. Oh, sorry, going up and then going down. GVK, is that body close you mentioned on 1045 minute candle? Is that below that swing low wick or below the body? The 1045 candle, 1045. This is the one right here. 10 for the swing, you mean? It's a reversal and then it's a swing reversal when you break structure for me. So That's the change in direction. It's giving you a change in direction confirmation. So we're changing direction. And then the swing reversal occurs when we break market structure to the downside, which is right there at 1040. This one right here, see how it closed right there? Below, a body closes below the low of this order block here, these two candles. That close, it closes below that right there, and then literally opens, comes back, gives it a little kiss, and then goes lower. That right there for me is the indication that we're going lower. There'll be a few times that it'll trade back through that, and then I say, well, if it trades back through that order block all the way through that fair value gap here again to the upside, then you change direction and we're going back the other way. So yes, you can get caught up, get beat up in consolidations, but that's where for me, it first algorithm says, guess where I'm going? I'm going here, give you an opportunity to get in, and I'm quickly running down, taking out that mean threshold of the consolidation, the lows. And now we have a new reversal going higher, or if it holds price, which it's doing right here on the bodies, and this one here gives way to the downside, which it just did, comes back up inside it, we have further downside. So that's where I flinched. Should have waited for the rule is a body breaks above that. But that's just my rule. That's just a that helps. Thanks. You're welcome. So now for me, I'd want to see this candle get taken like we talked about over here. See that reversal right here? This is this thing right here. Now that this little swing has been taken right here, I look for this opportunity to say, well, now that I got beat, I got slapped here for vanity's sake. I got slapped there because I did not follow my rule. So it came back down. Now, for me to get back in that, I must wait for it to go below here, come back into that, find support inside this candle and that fair value gap to go lower, like you would be looking right here. So right there, let's say I got slapped there thinking this is the same kind of scenario here. I think I see it starting to go up here and I go, oh, this is going higher. Slap, it takes me out and I go, ah, crap. All right, close out my trade before it takes the high. And then it reverses on me and it finally comes down and then finally breaks that downside. Now I can participate again for this. That's the same scenario here, rinse and repeat. That's what I want to see in order for me to get in short for this again. I have to see that candle get broken to the downside, come back inside it, find support, and then continue going lower. But if we get back above here again and a body finds support above this candle, and then this fair value gap here becomes support, to run back up into the range and look at all this liquidity sitting up here, and then that upside objective is still there. And I always keep it on there. If it hasn't been hit today or at this time, it will tend to do that, especially at 10 or 11:30. 11:30 tends to have another run on the previous higher low that occurred after 10 o'clock. It's the most recent higher low that occurred after 10 o'clock. It tends to take a run on that one more time before continuing the direction. And then 11:30 till 1 o'clock, Michael says, there's a measure of retracement on all the people that are trailing their stops back in here. There's a measure of retracement to come back and take them out. So then that would be, again, another objective I'm looking for. It's a short one that occurred after 10 o'clock. It's the most recent high that occurred. So a run on liquidity, that would be a nice little run on liquidity, aiming back for that daily fair or hourly fair value gap you see above us here. We can see it run all the way back up into that again for finally rolling over and starting to come back lower this afternoon, if that's the downside objective. See how this hasn't been filled yet? So anyway, there's a couple of scenarios I'm kind of running around inside my head right now. And right now we're sitting between, still right in the middle of going shorter, confirmation if we take that, going longer, if we support price, there's the fair value gap, little one below you right there. Body comes back, gives it a kiss right there on the wick, and now we're back inside that. Can we go higher? Can we go lower? So you wait for one of them to break. Dave Barry, how are you doing, man? Did ICT explain all the nuances during his mentorship? He says he didn't want to teach what he is teaching in 2024 to the public. Um, he didn't mention this is just my obsession over looking for when the moment we get below that one little spot. I know he likes to look at this side here. I like to look at that side over there. He um he has got many small little nuances he taught, but I think he's between you have to ask Derek and the rest of the people who are in this for since the beginning whether or not he's teaching more in the 2024 than he's taught us in the mentorship back in 2016. I think he's teaching stuff now that he never taught us in charter member stuff. And we paid for it all back then, but he's definitely teaching some nuggets of information. I'm going through his videos still, and I tell you, he is hitting some incredibly, especially this wick stuff. Like I love his wick stuff. It's beautiful. And yeah, I know he rants about live streamers have no idea what we're talking about because he hasn't taught it yet. That's fine. What I am talking about, I understand, and what I understand works for me. So I don't claim to be an ICT expert by any stretch, but I do know how to read price action. So that works for me. I'm good with that, right? So here's our support off of this order. These candles here found support inside that fair value gap. Still held price for a short. Now with closing, we still got a wick digging into this mean threshold of the candle now. See how it stopped right on the mean threshold? That's the line in the sand. You want to see it hold and start really pushing back higher. Or as that starts to dig into that wick multiple times into that candle loses its strength to support. So think about it like a support block or cement block, and it's being drilled into until it finally gives way and finally drops down. Then we use it, backfill it, support it, and then go lower. So just think about these as little probes, little drills that start to weaken this candle here. Always keeping in mind, I mean, this fair value gap above you, if it starts to trade above it and find support at it, then you're looking at back inside this range, taking out this high, and then you start to get nervous about whether or not this level here starts to give way. So you're back to this one and this one as two key levels. And that was just your, ooh, we drill all the way down into the mean threshold of that. These are all little indications that we could be going lower. But if this guy holds, you look for your, where's my proof that I'm going higher? I want to look for this and this to give way, find some support inside this cluster to go higher. And we're back inside that breaker again. You see that? On the downside, and we're working the bottom half of it, of that breaker. Great long morning. Yeah, I have to close it up soon. I think I can hear people up. They're finally awoken upstairs, and when I went up for my coffee the second time, all the snoring had died down, so I knew people are starting to they're starting to come back. The reticular activating system in their brain is starting to kick in. They're snoring. They can hear themselves snoring, so they start to wake up. I noticed that this morning. I just got the CPAP a couple of months ago, and I've been trying to get used to the CPAP. And then when it sits on your nose, you wake up to this this hissing noise, and you're like, "Oh, the damn thing's come loose on my nose." So you fit it together back on your nose again, and all of a sudden the sound disappears, but it's that little hissing sound that starts to wake you up, like all the snorting that used to wake me up when I used to snore. I'd wake up going, "What was that?" Oh, that was me. I think he's more specific, trading things, where his mentorship was a bit more broad. Yeah, I agree, Derek. So based on the little scenarios I gave you now, so we're watching this. See how we've drilled into this thing again through the mean threshold this time? Now we're looking for the dig on here. See how we said it kind of got that rollover feel to it? Now watch if we close below that and look at this candle here. See how we've closed below it now? Right, right there. See, it literally opened on it. That candle's low is 26.29. This candle's high is 26 or 629.5. So that captures your order block. Now we're looking for lower prices. Does that make sense to you guys now? And you can see how right now it's unfolding exactly as we want it to unfold. So now you have to say to yourself, now that you've taken that low, you see a fair value gap forming in here. Ask yourself, where does it fail for me? Where does this now, where do I go wrong? Let's say, I'm trying to do this live stream now and I'm trying to present to these people. What would, where would it go wrong for me? So there's a fair value gap that's formed here. Now we've taken this low. See that? We've come all the way back in one more time and just hit that order block. And we're rejecting off of it and we're still going lower into that first presentation. If we get through the first presentation, find support at the first presentation, look for lower prices, pull your fib tool on the whole range from high to low, from here to here, and look at where 50% hits. Look for order block has to provide support. Look for downside objective. So my next little box I'd be looking for, my little magic box would be down in here. There's one here, and there's actually one higher, which is actually on the this first fair value gap presentation here. There's one there, one here, and one here. Then you've got this one on this side. If we take out that last one, so we're finding support off of here. Where does it fail? Back to my question. Where does it fail for you? And you say, if I'm in price action and it changes direction on me, where does it fail? If I'm short on this, where's my fail safe? Where's my stop loss? Very important that you understand where you're working on those. Fail safe, stop loss. Well, my stop loss is going to sit up here. We usually typically put a stop loss above a recent high or swing, right? Your fail safe says that if this candle gets taken on the upside after we've already taken this swing, we see a swing, we see a fair value gap forming here. So rinse and repeat. I'm just giving you the whole secret here of my entire trade model. And you just look for this over and over again and study it and see if I'm wrong. That fair value gap there. So for me, this fails, this swing below this low fails if we climb above this candle on a close and take out this candle here for a swing. This is a reverse. This is a swing reverse. If we get a body above that, we use this for support. We're back in this range, and that's where I'm gunning for again. Otherwise, this candle still provides support. Look at that level. Comes back up, hits it, and you want to see it go lower again. So my stop loss is here. My fail safe is right there. Right there. And it's in such a small range. That's if I see it trade through this, I just go, and it starts to eat through the mean threshold of that candle or hits that breaker again. That will be my line in the sand. If it starts to trade through that, I close my fail safe off before my stop loss gets taken because now I know this should just come back up inside here, find support. If it's really weak, I want to see it hit support and then start traveling lower back into my range from here. And again, we're just trading internal range liquidity. That's the only kind of We're looking for the low-hanging fruit. We're banging around inside the tree. We're jumping around like a couple of monkeys jumping around, picking fruit inside the tree. We found support off the consolidation right there. There's a CAM Model 2 entry right there. Take the high to the low, CAM Model 2. And you see once again, I got taken out right at a precise level. CAM Model 2 did not have a body break the high. Continue, took the low, ate through the mean threshold of that candle right there again. She said to you, look, I'm going lower. I'll give you one little opportunity, two little opportunities, three opportunities to go lower. Now we've hit 50%. Your stop loss would move into break even, and you take a portion off of your trade there inside internal range liquidity if you're using the fib tool. If not, you look for magic box 1, which is sitting in here at 62%, all the way down to 70%. If you hit 70%, that's the first box. And then the next box will be finished at 75 to 80%, or 75 to 79%. Right? That is, to me, a level of precision that you can see in an algorithm. Once you see it, you can't unsee it, man. And it's a rinse. And if I'm wrong, then I know when price is going to break that direction when I'm wrong. Right now, I've been right. We looked for all this stuff, making these changes all the way up here. We noticed it was turning direction. We noticed these are the rules we wanted to see it established for us to go lower. It did exactly what we're looking for. It did not break that level. Then we said we want to see it break this level and use that for support. It did and went lower. 50, and we're just shy of 62%. So you move your stop loss to break even. You take half your trade off here, or a portion of your trade off there, whatever you want to leave on, if you're using that method. Now again, we want to make sure that we don't get above that level on a close, that is. And if we close above that, then we start looking at potentially running through here, because now we've got discount array. We're below 50%, so there's the discount. We could continue pushing higher. So you've got to allow yourself, if you're looking down here for your objective and you're not going to get it, don't get pissed off when you go, it starts to hit here and you go, oh, it did not hit my objective. Well, it gave you our failsafe long before you didn't get your objective there. It told you where it was going to go, where it was failing, what you're anticipating price action to do. And we've got 11, we're at 11:18 now. Remember I said it takes a run on previous highs before or after 10 o'clock. So this could run through here, time and price. This is where Michael talks about time and price. Could start running through here, take this high and start taking out another one more run on this and that upside objective. So let's just see where it fails, see if our fail-safe idea would work. And you always look for little imbalances down here too, because those are the same thing as swing points, like same as a little swing like that. And sometimes you have to stretch your chart out like that. See that little imbalance down here? That's the same as the swing, reverse. Take out that high right there on a close now. Now we're looking for a run back into this candle. Once we get a body above that. And now you're looking for, if we had a big wick, get all the way down here. See there's a little fair value gap forming here right now? We've got a swing here. For the downside people, you want to see this little fair value gap here give way. So you can't just always keep using this one. When a new one forms down here, you've got to be prepared to keep watching it all the time. This is a 1-minute chart, 15-second chart. We'll see if this is a reversal in here, and let's see if there's a, you see that working on a 15-second chart. See that candle right there? We have a swing. There's no reversal here though, but we do have a break in structure right here. Body breaks above it. We come back. We'll look at that. Bang, perfect hit, and a run higher. Take out this one here on the upside, come back, find support at it, and we're going higher. Now that's that level that we're looking at on the 1 minute chart to see if it gets taken to the upside. Right now you've seen on a 15-second chart that we have a change in direction, we have a break in structure, we have further upside, and we have an 11:30 run on the old recent 10 o'clock, the most recent 10 o'clock high, which is on the 1 minute chart is back here. This high and this high. So we'll see if we see which one it reaches for. And then you look at your 12 o'clock. 12 o'clock tends to run out the most recent high or low of the day, and that would be this guy here. That's the 10:30 retracement high. So if we take that out and go lower, again, looking for this objective up here. So you see on a 15-second chart, inside this range here, you would have caught that right down here, right off that candle there. See that? Bang. And you would have caught that run inside this range. Pull your fib tool from here to here, 50%, 62%. You get the reversal. See the reversal happening here. You've taken out these highs there. Watch this candle. So 15-second chart's a great one to kind of practice on right now, just to kind of get an idea of what to look for. Watch this, take the downside, come into this candle, and you're back inside this range again. And you got this fair value gap below you here. You've got all this in here too. If it does not take that high and it finds support right here, we're going higher. So watch in the next 3 seconds, 2 seconds, see where it closes here. There, see that? Back inside the imbalance. Bang, right there. Now, if you want to see it kick off higher, or again, if we lose that low, we're going lower. See, kicks off. Beautiful precision there, hey? See how it took out the high now? Now we're talking about we want that candle right there to hold price on a 15-second chart. That's precision, man. If that ain't price action study right down to frickin' precision, I don't know what else you guys need. Like that is laser frickin' precision. When you expect that spot to hold right in that imbalance right there, and it does, and you see it kick off like that, that's a beautiful reaction. You say, okay, it just took out that high there. Now, constantly study, where does it fail for me? And you're always asking yourself, anytime you put your trade on, what part of the range am I in? Where does it fail? Where does it find support? Notice now that we've traded above that level on the 1 minute chart. We've traded above it, found support at it. Now we're going higher. Back to our 1 minute chart. Meanwhile, back at the ranch, we have a trade above, comes back, found support inside this candle's opening. And now you want to see it go higher. Eat through this candle. Further confirmation now is when you finally blow through that. If you were trading this and that was the only fair value gap you had on that side and it's in the premium part of the range, would you trade it? Because if you did and it reversed and this is a 70% reversal inside that small range and came back against you, you're like, that reversal crap doesn't work. Well, you're buying it at a premium. If it doesn't take that candle out on the high, then you just caught optimum trade entry reversal, trying to catch this for wrong and say, oh, it doesn't work. Well, yeah, it does, but you're trying to catch it in a premium. So if you did try to catch it there and it broke through the mean threshold of that candle, slam that sucker right up against break even because that could turn around on you right in that mean threshold there. And if you see that mean threshold given away, like we saw on that other candle over here, drilling, we talked about the drilling down, this one here, the drilling through it, that's the same kind of thing that's happening here. If it drills through it, comes back to this candle again, and then finally blasts through like we saw here, drilled into it, came back, then finally blasts through. So there you go. It just keeps running. That's even more stronger now. It keeps running through. So all those levels, we said we're looking for support in, for it to go higher or lower. They're all failing when we want them to fail and supporting when we want them to support. So now this is the candle you're looking for. All the way down to here. that whole candle. When you get a body close above that, you want to see it. And it's nicer if it just taps the top of it and leaves and doesn't start digging all the way back into it. Because then this becomes the area of support, which it is already now. That's the swing, reverse, swing reversal, go higher. If you like what we're doing and you enjoyed this, hit the thumbs up. If you're new to our channel, you're welcome to stick around. We're here every day. It's all free. Nobody charges anything. We get the pleasure of Derek's and Abs and the boys and Dave and the boys. We get all their pleasure of their company every day. The characters are always here. We're always watching the same thing every day. There's your upside. See how we've traded above it now? And this was all anticipated whilst this was forming. We said, where does it fail for us? Well, here's where it failed. And we went down to a 15-second chart and saw where it began to fail down here on a 15-second chart, right off that candle right there. So if you're long on that off of there, Hadi would have been just chomping at the bit to be in this one. Yeah, see? Hadi was all like, I saw it way over here, man. And now you get the pleasure of being in another 60 handle run in a 15-second chart. Know where it fails, know where you find support. Look for that upside objective again now. And remember what Michael taught you about time, price, and when you can expect reactions off of certain levels at certain times. So this breaker here all becomes, look at that, right up to the coincidence that it stops right there. I think not. So now these two candles here are interesting to me. I like to see that. So you got that high and the open, or sorry, the close of that candle. This is what I was looking for right here. See, and remember I was short. I could have enjoyed all of that run below that liquidity, pulled a stop loss down, made profits on that on the way down. Had I followed the rule of when a body breaks that high, then I'm more apt to think long, right? And then when this formed here, you go, great. Now I switched from this one down to this one. If a body breaks this one on the high, then I'm on the wrong side of it, and the body breaks it right. Oops, just hit that back. Where's my back button? It's under here, isn't it? Yes, it is. So the moment it broke it there, taps it, that trade can go out there if you haven't paid yourself below here. As soon as it trades through there, close that one out, go long on that one, and you're in the next direction higher. And again, upside objective is up here. Now you want to see these up close candles give way and that big sucker right there, and aim for our upside objective. Hadi is still in. Whew, dinner's on Hadi tonight. If you enjoyed this level of precision, hit the like button. I appreciate it. And if you're new to the channel, subscribe. We're here every day. And I think I'm going to go because I hear them up now. They're calling me. I want to see this thing get hit before I leave now. Just for edification, I want to see my level get hit. And for toppings, for our friends, let's give it some motivation. Don't forget, we can come all the way back into this candle. Ideally, you want to see this stay open and you don't want to see this candle give way, because see how we've taken out these highs here? So your eye automatically goes to this and that candle there. You want to see this breaker now provide support. You want to see these old highs provide support. You want to see this candle find support right at the opening. Beautiful. I like that snap off of there. That's a nice thing to see. Let's continue on going higher now. This is a quick little return. We do not want to see it start eating all through here, because then we're back inside this range again. This could be that whole lunch hour crap going on here. So it just goes back and forth and back and starts to work its way up. You want to see this lunch hour, 12 o'clock, take out these highs and then start reversing. So that would be a nice little place for that to do that. Watch this, that candle right there. I want to see that candle keep supporting price and going higher. Hadi's like, I'm out. Pay yourself, man. There is no worries about paying yourself. If that runs up there now, don't beat yourself up, buddy. Just enjoy your cash. Put it in your bank, your little demo account, and spend it. Spend those demo dollars on demo coffee. Inside this range, my box would be here. That's where that internal range liquidity would be aiming for if I was coming from here. So where Hadi just got out, a perfect place. Internal range liquidity hunt, move to the sidelines and wait. If it takes that high, then we're heading for the next range liquidity hunt, which is right there. Nice precision out there, Hadi. Nice internal range liquidity hunt. Well done. You're killing it now, hey buddy. I love what you're doing, man. I love what you're doing. I love your setup. I love your entrance, your exits. They're looking really good. Box to box, man. You said it. Like to like arrays. Man, I've been saying that thing for months. Like array to like array. Now you don't want to see that get, if that gives up now, you start to get back into this range. You don't always get the carrot. You wait for reversal. It's eating through here, not a good sign. You're back into this candle all the way down into here. So we can go right back into this fair value gap below you here now. That's a discount array inside this range. That would be the downside hunt I'd be looking for inside there now that we've broken that. Proud of you, man. I'm very proud of you guys. You guys are getting some good discipline there. You're Wednesday, you're in non-farm payroll week before an election. Be content with that beautiful little exit. Run to box, like array inside a range. That was a perfect entrance and a perfect exit, was it not, Hadi? Or pretty close to perfect? Internal range liquidity hunt. I'd like to see that candle right there, hold price. Pull your fib tool from either this swing here up or this whole bottom, from the bottom here to the top, and see if this is the downside objective. And we'll see how we act inside here. So now, Hadi, now you can start thinking more advanced trading. If you're trading from box to box and you see a turn, and then you go box to box again, you're going up and down and up and down, and you're trading like to like arrays inside consolidations, or sorry, inside small ranges. So that's your, you want to see if this holds now. I think we're looking at this guy here. Yeah, it's the fair value gap. And it's the specific fair value gap we've been talking about when we catch our reversals. I didn't take any trade for New York. I guess I'll make a move to my bed. Thank you once again, Darren, for an amazing live. You're very welcome there, Curry Fishball. Enjoy your sleep. Yeah, I'm out of here too, Abs. Good to see you, man. Thanks for popping in. Always appreciate your support. Thanks, man. I'll see you on Telegram there. Yeah, it's a great trading day. I have really enjoyed that. So again, keep in mind this upside objective. Wait for the carrot, perhaps for a lunch run. And again, always look for the potential for where it fails. Where just because I put the carrot up here doesn't mean to say it's going to go there. Look for when does it fail and when does that carrot now become my objective on the upside. Otherwise, if we continue going lower, where's my fail safe? You guys, my advice is for whatever it's worth to you guys, study price action, look for the fail safe, look for the stop loss. Stop loss is if it quickly snaps back against you and takes you out before your fail safe is triggered. That's what the stop loss is for. Those immediately whack take you out. You think, oh man, it quickly ripped back against me and did not show me that it was changing direction. It was manipulation, came back. That's what the stop loss is for. The fail safe is to be in price action, watching where it fails for you. Look at that, right on the box. You can't ask for better than that. Box to box trading, man. It's Hadi's just sitting there wringing his fingers right now, going, oh, I can't believe how easy this is. Um, yeah, so always have your fail safe, always have a stop loss. You're going to rethink how you think about stop losses, my friends. You will look at a fail safe as the way to go because now you've studied price action. You see when it changes direction and where it fails for you, and that's where you'll get your trade off and get back in sync with the market. Or if you have a model that you use and you have a fail safe, you know if your model is going to come to fruition or where your model is going to fail by staying in price action at this kind of detail. I hope this has helped you guys. I hope you've enjoyed it. If you have, hit the like. If you're new to the channel, subscribe. This level of detail is shown every freaking day. We love it. We're looking for some fun tomorrow. And again, we're going to be I'm staying out of the markets tomorrow unless I see something really quick. Internal range liquidity hunt. And then we're looking for NFP Friday. Let it peel out, do its thing 15 minutes after NFP is in. We're looking for another big conclusion to our week. So with that, I will see you guys tomorrow. All the best and take